Good morning, everybody. It is Thursday, January 25th, 2024, 8:48 a.m. I'm sorry I'm a little late. Apparently, I didn't plug in this camera overnight, so it was not charged as soon as I wanted to go live. It's probably going to die in like 5 seconds, but at least we got a little bit of the camera before we get started. All right, we're back on the market open. We got a lot to talk about. Obviously, Tesla earnings were yesterday. And we had a nice little live stream for about 3 hours. So to those that were there, thank you for joining. We're probably going to recap that earnings. We should probably discuss a little bit of what happened. Tesla right now in the pre-markets, $189.49. It is down 8.86%. So we are in the 180s. We'll see how low does it go. It probably makes sense that it has sold off given some of the things that we talked about or that we heard on the call that just weren't the most exciting to hear. So we'll talk about that. And we'll also talk about, where does the bleeding stop and if the bleeding does stop when it comes to something like Tesla. Then we've got two other big pieces of news that you may or may not have heard of. Both are bullish in my opinion, but they both need some digging into to really understand what's going on. Number one, you got GDP growth in Q4. That was 3.3%. This was way past expectations, 1.3% ahead of what Wall Street wanted or what Wall Street thought of growth of GDP in the United States by 2%. So the economy is growing significantly faster than at least what Wall Street expected the economy to grow at. Is that good for inflation? Not really sure, but that's definitely good for, at least in the short term, the idea that we are not heading into a recession, the consumer is not in the worst spot, all those different types of questions. And then the second thing that happened last night, which was really, really important, is that the Federal Reserve ended their the same thing that they started back in March of 2023, which is what they had to do when they bailed out the banks. The BTFP program. They are not renewing it. They're ending the program. And you can't really end that program if you don't have a plan to be able to cut rates. Otherwise, a lot of these banks, especially regional banks, are going to get screwed. So if we take a look at the KRE right now, I just want to see if it's down in the pre-market. Now, KRE is up. Okay, so the market's assuming it's bullish. We got to talk about that and break down what the hell it is. I'm sure you heard about it last night and you're like, what the hell? Why is the Fed not doing this? So we got to talk about that because that also was just very, very surprising to see what the Fed was doing yesterday. So we've got a lot to talk about. Missy Iger, James Velez, Casey, Broccoli Bob, Yeti, June, the Foolish Hiker, I Show Sad, Villet, William, Dale, Mike Feldman, Kraft Jan, Sethi Roth, Invisible Voices, Great One, Raul, good morning, Amit, good morning to you, David, Mr. Seymour Duck, Brett Andrews, Shades of Terry, Joshua Garcia, John Steven, Nick Piercy, Billy Jack. I'm sorry I was 2 minutes late, dude. The camera wasn't, you guys are saying, like, why is he late? Stupid camera was not charged. I'm surprised it didn't die yet, dude. I thought the camera would have died by now, but it's good to go. Philip Rizzo, Victor Hernandez, Tony, Nicholas, Joseph Ting, Abhishek, Allen, NVIDIA 650 today. Oh boy, if that happens, that happens. Dax, Amit, I can't DM you an X. I did reply. Yeah, I'll reach out to you, Dax. I'll reach out to everyone who replied to the offer, even if they didn't DM me. Richard, Hands, Jamie. All right. Thank you all for being here. I think let's start off with Tesla. Let's do Tesla. Let's do Tesla, because obviously Tesla earnings were tough. Was not exciting given what we saw. And it's one of those things that investors are going to have to kind of stomach right now in regards to what's going on for Tesla. First of all, let me know in the chat what you guys thought about Tesla. Oh, wow. Matt sold a chunk of Tesla. Matt, you sold your wow. It got that bad for you? Matt, I know you are super bullish on Tesla, Amazon, and PayPal. You can never say I don't care about people that watch. I know these things about you. I know all these details about your lives. Tesla, Amazon, and PayPal are your top three, and you just sold a crap ton of Tesla. Okay, so Matt selling his Tesla just tells me that it tells me that this earnings call was not good because you are pretty damn bullish on Tesla. So let's talk about why this earnings call wasn't good. Let's have a sort of sober conversation, which is what Gene Munster called it. I mean, when he was on CNBC last night and he talked about Tesla's earnings. Look, the problem with Tesla earnings is that they're not really growing at the level at which people thought they would be growing in regards to the growth rates. Now, a lot of the bulls will point to, and look, I'm a bull as well, but I'm talking about sort of the people that live or die by the company, that, $97 billion in revenue, $4 billion in free cash flow. They have $29 billion in cash. They did $9 billion in profits. Like, this is not a dead company, yada, yada, yada. it's like, dude, no one's saying it's a dead company. No one's saying it's going bankrupt. No one's saying that, Tesla has an existential threat. All we're saying, and when I mean we, I just mean in general the market in regards to why it's down 8% right now, is that maybe this valuation is a bit unsustainable given the growth, especially given that rates have not come down, given that EV demand is there, but Tesla's not really scaled to the point where they can just pop out all these factories. And it's in a situation where, look, if they can't deliver the growth, then what are you really paying for when it comes to Tesla? That is the problem. There was one quote that management said yesterday on the shareholder deck that I think everyone was spooked by. The quote is verbatim: "In 2024, our vehicle growth rate may be notably lower than the growth rate achieved in 2023." So maybe they're going to deliver more vehicles than they did in 2023, which is 1.8 million. But the rate of growth between 2023 deliveries and 2022, which I think was 1.2 to 1.8 million. So they delivered 600,000 more cars. I might get that number wrong, but I think that was the growth rate. Maybe they're only going to deliver 1.9 million, or 2 million, which means that growth significantly slows down. And we know this is happening because the Germany factory is shut down for the next month, right? So, I mean, it's very reasonable that they're being so honest about this. But the fact that they are is the market's kind of being like, why? Why is this happening? Zermatt Holdings LLC, you said, give me a shout out. There you go. You got your shout out. Thank you, Zermatt Holdings. Thank you for being here. So that is the situation that's going on right now. Kevin Smith says, dude, it will go down and investment firms will buy it right up. It never stays down. It's too important. Look, I agree with that. So from that perspective, I'll talk a little bit about the other numbers and earnings, and then we'll talk about the stock price action. But I think this is going to be a year of DCAing, and that year of DCAing might not last so long. So, yesterday's word of the day was gully washer, and gully washer is a heavy rainstorm, but it's short. I kind of think that might happen with Tesla in 2024. It's a heavy rainstorm. We might see 150, 160. And even that, I think, it's going to take some real sell side pressure to get there. So that's not like a given, in my opinion. I thought 180-ish was kind of more likely. We'll see how bad it gets. But it might be a short storm. It might be a storm that sucks, but it's just short. And the reason it's short is because at the end of the day, this is one of the most interesting, generational, exciting companies in the world. If the world is going to EVs, then Tesla is going to be a major player in that world. All these investment funds know it. A lot of retail investors are smart enough to know it, and people end up buying the stock. So there may be some short-term gains or short-term benefits and maybe selling the stock right now and getting back in and trying, just getting more momentum later, because not holding it at this level. But it definitely doesn't mean that this is the worst time to buy the dip. Akshay says, what do you think about the threat of Chinese EVs? So that was something that we talked about yesterday as well in the stream. China is 32% of global automotive sales. 25% of China's of Tesla's sales happen in China. And China has massive competition between the NIOs and BYDs of the world, particularly BYD. That's just so much cheaper than Tesla because, they've been able to get their costs down. And also they're so much more vertically integrated in China, and they're a Chinese brand. And at the end of the day, branding does matter. And, on terms of advertising, Elon and the team yesterday, they were talking about how they're doing more outreach campaigns. And they did some campaign in Texas that, got them 10 million unique eyeballs, and 500,000 of those unique eyeballs came to the website. And so they're experimenting with advertising, but Chinese consumers, at some level want a Chinese brand. And so BYD is definitely competition. China is definitely competition. It's just a very competitive ecosystem right now for Tesla. And that's the tone I got from the call. When I was listening to the call, and I'm sure other people would agree, Elon was kind of just like, dude, either you believe me that I'm going to take this company to the moon in the next couple of years, or you don't. And if you don't, I really don't care. Sell my stock, go do whatever the hell you want. I'm going to be successful. I'm going to execute. And you can, be in your little corner and be upset about whatever but I'm going to win. And he really wasn't that apologetic about it. He wasn't that arrogant about it. He also wasn't that he wasn't that humiliated by it. He was just kind of just like, it is what it is. These are the numbers. The numbers aren't amazing. The numbers definitely aren't horrible. We did a damn good job. And he highlighted the parts where they worked hard. He told the parts that they need to work harder, and that's it. And so I agree in the context of what Gene Munster said, which was that it was very sobering in terms of the lack of revenue growth, because this is the first time Tesla investors have to deal with the fact that the company is not growing 50% year over year or 40% year over year in terms of top line revenue. Automotive grew 15% year over year, energy grew 54% year over year, and then services, I think, grew like 30% year over year. But quarter over quarter, the growth rates were, horrible. And you would expect that, right? And year over year, it's good, but like now you have to build off a bigger base, which is just harder to do. As you become a bigger company, it's much harder to do. He pretty much blamed interest rates. Yeah, I mean, and that's the other thing. Towards the end of the call, he was just like, look, interest rates are interest rates. And so if I can't control interest rates, then I can't really control. I think at one point he also just said, he kind of told an analyst, he's like, look, like the Federal Reserve, raised interest rates, and that's something that I don't have control over. And he's right about that. So the question becomes, when the Federal Reserve cuts interest rates, at least 25 to 75 basis points, is Tesla going to have the effect that it needs to have? And I think it will to an extent, but it's still not going to be like financing a car is going to be the cheapest, even if you're only down 25 to 50 basis points. So they have a lot of headwinds. They have a lot of headwinds coming up. And there's not a ton of, excitement right now over the automotive business. In terms of the bot, look, we talked about it a lot on Finance Junkies. Bot is exciting. Bot's cool. But it's not like the bot's going to come anytime soon. It's really not. Like, it's going to take some time. Elon said they're hopeful by the end of next year, or by the end of this year, maybe they can deliver a couple of models. But even if they do, that's not like a commercial model. That's not a model that's going to be going out to thousands of warehouses. That's just like some testing model. So that's not something that's significantly going to create revenue. So in terms of the bot, I mean, they were also lackluster about it. They were kind of arguing back and forth, him and one of the executives, about how useful it is as a joke, but it was just kind of weird to hear, because you want to hear a much prettier vision, and they were just being so honest. Like, I appreciate the honesty. They were just like, hey, it's not really usable yet. Like, we're working really hard, but eventually it will be usable. And, that's what they're doing right now. Elon, on needing the 25% of voting shares, he said, we've had some issues with institutional shareholder services, ISS, or as I call them, ISIS. Haha. And as soon as he said that, the stock went from 199 to 197. So that was kind of funny. That was like the highlight of the call in terms of humor. And the reason he said that is because that's why he wants 25% of voting shares, because when he tries to negotiate with some of these larger activist investors, they're not really activists yet, but they could be activists. That's where he's like, hey, I need to have control. And so he made a little joke there. And then at the end, the ending was very weird. And then we'll listen to what Gene Munster had to say. Elon Musk said that, and this didn't just catch me off guard. It caught a lot of people off guard. Elon Musk said the dojo is a long shot and has a low probability of success. And I've never heard him say that before. Now, a lot of people came back to me and they were like, well, he has talked about dojo being a long shot and having a low probability of goodness gracious, success. And, and, it's not like he's always promised dojo. And I said, you could make that argument. You can give me a bunch of quotes from the previous quarters about Elon saying, verbatim what he said yesterday, that dojo has a low probability of success. For those that don't know what dojo is, it's basically Tesla's integrated compute model, so that they have to stop paying billions and billions of dollars to NVIDIA, and they can kind of create their own, not just chips, but their own ability to integrate computational models to make sure that FSD can run on its own, right? Without having to constantly get updated from NVIDIA chips and NVIDIA semiconductors and things of that nature. So it's a way for them that they've been selling to the market and to investors as a way to power the optimists, a way to power FSD, but also just not be so reliant on NVIDIA, which obviously increases margins and cuts CapEx, and it's very good. And the argument that I made back against some of the people that said, well, Elon, hasn't always been saying dojo is going to happen, so it wasn't a full 180 yesterday, is that even if Elon has historically said in the past that dojo is low probability, he has two things. He has never been as sober as he was yesterday. I think that's the word of the call. He has never been as explicitly sober and basically like honest about the fact that it has a low probability to win, and it's high risk, high reward, and basically telling investors, hey, don't like bet on this. Essentially, that was, if you read between the lines, it's like, it's really hard. We're going to pursue it, but it's not like dojo is going to become some massive revenue stream or some massive infrastructure play that we're going to be able to take advantage of anytime soon, because there's a good chance it could fail. There's a 90% chance, as per his numbers, given there's a 10% chance it could win, that he said that it could fail. So that's the first thing. And the second thing is, every Tesla bull that I know, like super uber Tesla bull, they've been touting dojo as a major part of the thesis. And it's not just the YouTube Tesla people. It is the Adam Jonases of the world, the person who has the highest price target on the street for Tesla. If you read like his 50-page thesis that he put out a couple months ago, there's a good chunk of it that's dedicated to dojo. So it's not like the YouTubers got super excited about this only. The institutional investors were also like, okay, so this dojo thing is super important. I interviewed Warren Redlick a couple months ago, and he spent 20 minutes explaining to me why dojo is so important. So you can't have the investor base that is an enthusiast and evangelist of Tesla tout this as a major bull case. It's like me saying, well, AIP is a major bull case. And I'm like, well, AIP is probably not going to work for Palantir. It's like, no, dude, you can't make video after video saying AIP is probably where they're going to grow. And then you're just like, well, AIP is not going to be a thing. I mean, if it doesn't grow, it doesn't grow, but it can't be, it has a low probability of growing. All odds are that it has a higher probability than not of probably being successful. But now dojo kind of flipped that around. So I think everyone, who covers Tesla made it seem like dojo is a part of a bull case. And Elon yesterday just said it's not really part of the bull case. And that's the tough thing to stomach. Even though in the past, if he's said things that have been the same, he's never said it to the point where the Uber investors of Tesla, the Uber bulls, would feel they should be more cautious on explaining Dojo and give hesitancy towards it, because Elon's never had that level of hesitancy. So it's hard, as if you're a content creator, to have the same thing as well. Martin says Dojo is already training FSD. Will it be as good as NVIDIA is the question. Yeah, and I think the argument Elon made was that it's just, you shouldn't count on it being as good as NVIDIA right now. And that's he's not talking about Dojo itself failing. He's talking about Dojo itself becoming so strong that they don't have to use NVIDIA, which is because remember, Adam Jonas's price target is influenced by massive CapEx reduction because of Tesla's ability to vertically integrate and for them to have SaaS margins. FSD is part of the bull case because they can have SaaS margins. Not having to pay billions of dollars to NVIDIA is part of the bull case because if they can do the compute, they don't, that's just billions and billions saved, which just increases top line margin, I think, by like 8 or 9% from the report on every single car. Like there's so much just like pure value out of the fact that they own that part of the business. But Elon basically said it's, we're going to keep using NVIDIA because Dojo's not good enough yet. And so that's tough. That's tough right now. But Thomas says, I believe the hype of Dojo was mainly created by bulls and content creators, not Elon. Yeah, I agree. I'll give Elon that. It's just, this is the first time he basically shut all that down yesterday. I mean, I don't think you're going to have any bull that's going to be dare mentioning Dojo as a part of the thesis now, because if you say that, you're going to be, well, Elon said 90% chance it doesn't overtake their NVIDIA spend. So if that's the case, like if the guy himself is saying it, it's hard to imagine it like that. Let's listen to Gene Munster. He was pretty, honest about this. Let's hear what he had to say about Tesla as well.
Melissa, this was the most sobering outlook that I have. Melissa, this was the most sobering outlook that I have seen from Tesla when they talk about a step down, a notable step down in growth rates. I just want to put that in perspective. The street was looking for 19% revenue growth in 2024 for this year. And they said it'll be notably lower than that. So it probably comes in at 10%. When I see that, I think stock's down 5-10%. That was my initial reaction. I'm surprised to see where it is. The reason why I believe it's holding in is twofold. You highlighted the importance of the gross margin X credits. I would just add to that, that's the first time in a year that we've seen that improve. And so that is a surprise on the positive side, especially given the ramp of Cybertruck, some of that investment. And second, I think the stock reaction speaks to the conviction of shareholder investment base. And effectively, this comes down to a very simple question: do you believe that EVs are the future? And if the answer is no, that you think that this is going to take 20 years to get to electrification and autonomy, then you believe the stock should be down measurably, meaningfully, 10% more on this news. But if you do believe in the future, then this punky, soft guidance that they're giving for this year is going to ultimately prove to be noise, because everything that Tesla's doing, building out this next generation vehicle platform, everything that they've done in their investments in autonomy, all of that is coming at a time where traditional auto is stepping back from these. And so that's the question. If you believe in electrification and autonomy, Tesla's actually in a better position longer term. And I think that the reaction to shares speaks to the conviction, long-term conviction that Tesla shareholders have.
Well, and I agree on that as well. I mean, like at the end of the day, I agree with what Chris said in the chat here, that short term, there's going to be headwinds. Long term, we're going to be fine because they're going to build out the next generation vehicle. They are going to be able to ramp that up. Cybertruck's going to start to scale. They are going to become more vertically integrated, and they are in the next, 3-4 years as the world. I mean, like you got California talking about they're going to ban ICE vehicles. Like the world is just going to this direction. It's not fully there, and it's going to take time to get there, but we know the direction they're going in. Tesla's going to be in that direction. They're going to be the leader in that direction, even if internationally there's competition and things of that nature. So I think I mean, long term it's very bullish, but short term, dude, it sucks. Short term, and I don't really know if I want to say it sucks, because as someone who has not fully built out my Tesla position, which I'm trying to build out, I wouldn't mind buying at 170 or 160. I mean, that would be a great entry price in my opinion. Like that would be, for the next 5 years, that would be one of the best deals I would imagine happens in the market. I don't think we get that low as well. That's the other thing I'm skeptical of. Like, given what Gene just said at the end, I don't know if it ends up getting that low. We're at 189 right now. Even the sell-off right now, the 8% sell-off, like It's a sell-off because it's like the basic algorithms that didn't like the margins and the outlook. They didn't give 2024 outlook on margins or delivery numbers. They just said it would be significant, notably lower. But even the algorithm selling off right now, I don't know if that actually lasts throughout the day. I mean, maybe we will see. But if it doesn't, then who knows? Maybe this dip is so short-lived we go back to 200, or maybe we crash to 170 today. Let's see. It's going to be really interesting to see, to see how this picks up. Let's listen to a little bit more of Gene because he has some good stuff, and then we'll move on to everything else going on in the economy.
Can you help us understand, Gene, what this next-gen vehicle platform is and what that gives Tesla in the long term? I mean, we may see that step down in volume growth this year, but on the other side of that, if we see increased efficiencies, if we see increased output, this could just, you could smooth this year over and see the trajectory higher.
You'd see an acceleration back potentially. I mentioned the 10% for this year, but next year could be 30% plus growth. And the specifically is that this is a lower price vehicle, likely around a Honda Accord. A typical Honda Accord in the US starts at $30,000. That's below the average selling price of a car in the US at $48,000. And it's likely going to be a couple vehicles. One is a lower price car with a steering wheel, and then followed by a robo-taxi. And so that's what they're talking about. They need to build enough of a gap between the Model 3 and this lower price vehicle, not to create some confusion. So this is going to be, again, a measurably lower priced vehicle and compete with where the sweet spot of the growth in the automotive market is today.
Hey, Gene, it's Karen. Thanks for being on with us today. So I've always had trouble with how do you value Tesla then? Put it all together. How do you come out with a valuation for Tesla?
So what I look at is where the revenues are going to be in 3 to 5 years. I want to revisit it after the call here, but think about what that revenue growth is going to be. I mentioned a step back up to 30%. And then I go and look at what other companies are trading at. The best comp is Apple. When it comes to hardware, software, services, I think that's most representative of Tesla. And so that's a 6 or 7 times multiple. And so when I put those two together, I can comfortably get to above a $1 trillion market cap for kind of that 5-year period. Again, I want to see what's going on with their commentary on kind of long.
That would basically be a that's basically everything. That would be a doubling in 5 years. Not even a doubling because we're at 600 billion right now. So that would be that wouldn't even be a 2x in 5 years if he gets to $1 trillion in 5 years, which is tough because 5 years is 2029, and by 2030, see, this is the crazy thing about like people that are ultra bullish. This is why, sometimes you got to just take the shit. When Palantir was at 20 and 21, and I got on my streams and I got on my daily Palantir show that I do every day, and I said, I think it's a bit overvalued right now. I said it, nicely, but I definitely said this shit is stretched. You got to deal with the shit. There are people that think Tesla's going to sell 20 million cars by 2030. Now, look, given what we had from this earnings call, I don't think that's happening. If you don't have the next generation vehicle by not only late 2025, but ramping by 2026, you don't have, they're going to do maybe 2 million in 2024, maybe. And that's based on us assuming the growth rate is not as low as what they're saying. That's going to be notably lower. I don't know what notably means, but it means it's going to be lower. To imagine that 10Xs in 6 years when they don't even have a lot of these factories built up and ready, right? Mexico, India, this stuff is getting started. 20 million by 2030 is just insanity. It's just absolute insanity. It is insanity. And so, I have respect for a lot of people that try to do that analysis, but this is where the Gary Blacks of the world are very sobering, right? Because you need someone to come in and just be like, wait a second, guys, 20 million vehicles. That doesn't just, you don't just pull 20 million vehicles out of the garage. Like you really, really need to have a system and an infrastructure and a supply chain that's ready to support that. If Tesla's shutting down their factory because of the Houthis for 1 month in Germany, you don't think there's going to be other supply chain geopolitical issues over the next 6 years that stop them from making 20 million vehicles? Like, it's just not that easy to do that. So if he only has $1 trillion market cap in the next 5 years, look, that's not bad. It's not a bad return. It's just not the uber bull return people were talking about. It's going to 5-10x by 2030. That's likely not going to happen. So are you adding? I got to see where the price goes, dude. I don't want to, I'm not super eager to add. Look, if it jumps back to 205 and I have to buy at 205 over the next couple months, I really don't care. Like that it's not that big of a deal. But I'm not like super, super, super eager to immediately jump in. At this point, given my Tesla position, if I get a really good price, it's awesome. If I have to buy the same price I've been buying at 210 right now, then that's fine. That's whatever. Let's take a look at what Jesse had to say. Apparently, he had a very bearish take So let's get a little bit of his perspective. We got about 17 minutes till the market opens, folks. Thank you everybody for being here, and thank you for everyone who was here yesterday on the stream. Really, really appreciate it. I think we had like 850 people that were here for the stream, and I mean it was just awesome. We got to all deal with that boring ass earnings call together. But then at the very end, you guys saw me wake up. As soon as he said, "Yeah, Dojo's not going to work," I literally got out of my seat, and everyone was like, "Okay, I'm awake," and then we just started discussing how fucking trash this call was. But nonetheless, we were all there. Thank you everybody for being there. Okay, so Jesse, let's see what he bought 300 shares of Tesla yesterday, right before the market closed. So let's see what he has to say. If you're a Tesla shareholder, you're gonna hate this post, but you need to read it. Yesterday, I was making fun of Chicken Genius's price target in the 60s. Today, I think he could be right. Well, that's a hell of a headline. Now, just before we keep reading, that's also Gordon Johnson's range, that 25 to 50 range. And I was thinking to myself last night, I didn't tweet this, but I was just like, imagine if Gordon Johnson is right after all these years, and we actually stay flat in like that $50 range. I mean, that would be insane, dude. Like, that would just be crazy. Okay, why? This call was very needed, but also very sobering. It reflects the fact that the current economy could be tough for auto companies and even Tesla. It also set realistic expectations for Dojo as well as other push for production. From that standpoint, this call was a success. I agree. It was very honest, and for Tesla shareholders that want honesty, that was a success. Also, I want to reiterate that I believe Tesla is going to be one of, if not most, the biggest company in the world in the next 5 years. I won't go over the list of why, but people really study this company that know why. But here's the rub. The stock price is at a high premium. This was based off 50% CAGR. That is clearly not going to be the average this year and possibly next. He's probably right about that. This is very bad when the PE ratio is in the high 60s right now, 67, and was as low as the 30s a year ago. And my fear is that we could see the same level again, if not slightly lower. Keep in mind that this is still a premium to the auto sector, which I believe is deserved because it's Tesla. So yeah, if you think it's a tech company, maybe not the highest PE. Obviously, Nvidia, close to that 50 levels, but Nvidia is also growing 200% year over year. But in the tech sector, in the automotive sector, you got PEs of, maybe 7 to 12. So it is a little bit higher. So then he goes through the support zones. I'm sorry, I'm not the smartest at male astrology yet. I'm getting better at learning technical analysis, but there's the fancy little coloring book. I can't really explain it to you yet. I will learn over the next coming months, and I will get better at this, but that is the coloring book. So there are the support zones. We were unable to find any support on the 200 weekly moving average, which is also under the 50 monthly moving average. We've also broken down under the 0.5 Fibonacci. I know Fib stands for Fibonacci, and are not likely to come back to this level anytime soon. Normally, this would be the bottom. It's the 0.618 Fibonacci, which is the golden retracement zone. We'll need to see a strong bounce from here that holds up if we want to work this time. I'm just not sure that's enough based on what we heard yesterday. The next level that's acting as a magnet right now is the daily gap around the 147. This is, in my opinion, the highest bottom we'll find. I think there's a 70% chance we hit that target. The next level is the 100 monthly moving average. By the time we arrive in this range, we'd be near 123. Dude, it's like reading a bad movie, and you're just reading it every chapter, and this will happen, and this will happen, and then we all die. It's like, I don't know if this is likely the bottom, but it does mark the zone where we're likely not to spend a lot of time underneath. So if we make it this far, I already have at least 75% of the cash I was using to buy into Tesla stock at this time. This would be the ultimate bottom. If news doesn't get better from here, this would give us a PE in the 20s and maybe the teens, still a premium to auto, but way too low for Tesla. Keep in mind, we will see swings that are overshot in both directions, like when the stock had a PE ratio of 1,400 2 years ago. And then he just says, look, I hate writing this, but this is what the technicals are telling me, and I will still be a buyer of last resort. So he thinks it's 147 is first support. Below that's 123. And then below that, $60 is where the stock may end up. Now, granted, I don't know, as again, I'm learning technical analysis, and he's kind of using technicals here, a little bit of mix of fundamentals in terms of lack of growth. And so the market's just not giving that big of a premium. And then you got these support levels. I don't know how likely that story is to play out for the simple reason that if Tesla gets to 150, I will get incredibly excited. Someone like Chris, who's been not bearish, but just pretty objective about Tesla, he would get very excited. So for Tesla to get to that 100 range, $60 range, those levels where Gordon Johnson basically takes a victory lap across the entire world, he goes on a little victory tour. For it to get to those levels, I think you would have to lose massive retail sentiment. And Elon Musk has 170 million followers on Twitter. And, when you got Elon, who's, he can pump his own stock, he can basically, keep getting people excited about Tesla. If he sees the stock fall that much, he will start spitting out the Saudi Aramco line, he will do what he needs to do Retail will still be excited. I just don't know if retail loses enough interest for it to get that low. I really wonder what you guys think. Let's do a poll. Let's do a poll on this one. Let's do a poll on, does Tesla go to $100? I'm really curious what you have to say. Does Tesla get to 100? If you put a gun to my head right now, I would say no. I would say no. I would say it bottoms out at maybe 175, and then retail momentum keeps it up there. Even if the premium is not justified, even if the PE is ridiculous given the growth. And look, Jesse's right about it. The growth is not there. If the growth's not there, the growth's not there. I mean, there's nothing more you can do. Like, you have to be super honest about it. If the growth is not there, the growth is not there. And Elon Musk was pretty honest that the growth is not going to be there. So if it's not there, that's tough. A lot of people say it's going to 150, 101. I mean, we'll see. We'll see. Breakfast Pizza says this is why dead people outperform traders. People are so emotional. Tesla is doomed until a month later, and people are talking about moon again. For Jesse, I have a lot of respect for him. He just follows the charts. He doesn't really care. And it's not like he gets everything right, but he is pure. Jesse's purely based on fundamentals and charts. He's not emotional ever. So that's why I like looking to Jesse's analysis, because if he thinks it's going down, he thinks it's going down. If he thinks it's going up, it's going up. If there's a short report that came out on one of his Bitcoin mining stocks yesterday, he sold out of all of it because he was unemotional. He's like, yeah, I don't like the report. I'm selling out, So from his perspective, when he says the stock could go up or down, it's really just a question of, hey, is there a market narrative that is matched with the technicals that could see a shorter price? And so that's where he comes to his thesis. But we'll see. We'll see if it gets there. Felicia says 150 or 118, 150, 150, 150. Wow, a lot of you guys think 150, 142.69. I see what you did there. 165. Oh, Pouncer got an extension with Carosoft. Okay, not bad. That's cool. Let's see if they PR'd it. That's not the biggest PR in the world. I mean, that's just them continuing to work with a government reseller, but that's a good thing. That means that definitely shows their go-to-market hopefully is working more and they're expanding in the government space. So that's good. We'll pull that up after the bell. But Arnie, thank you for that. That's awesome. But Jesse's not emotional. Are you seriously? He blocks people left and right. He might be emotional about how people talk to him, but he's not emotional about stocks. That's a whole different level. People can be emotional about other things, but when it comes to stocks, that's the thing I care about. Is he emotional? Personally, no. Like, he'll sell out of something and take a loss, or he'll buy into something at a price that you may think is crazy because that's just where he sees things are going. Carosoft is a great partner and distributor of government business. Yes, dominating your investments. Thank you for being here. They're super big for Palantir, and so happy that we have that partnership extension with them. Okay, so a little bit more Tesla talk, and then we'll go to GDP growth and stuff like that. I mean, look, Tesla's the biggest story of the day, so we got to talk about it. The other thing that Elon discussed yesterday on the call was expectations around Cybertruck, and his argument was demand is through the roof, and the demand is not going anywhere. The problem is that they are not currently at the capacity where they can ramp it up in a sophisticated way that allows it to deliver all the cars that they need to deliver, which goes against the argument that we heard a couple of days ago from Morgan Stanley when they reduced their price target that global EV demand is stalling. Maybe global EV demand is stalling, but not to Tesla and not to Cybertruck. So one bull narrative you can pull out of the call as well is Elon was pretty honest that the fact that interest rates are high, which is an issue, and input costs are starting to come down, which is going to be good for the gross margins. By the way, they got the cost down from $36,000 a car for $39,000 to $36,000. So the cost of goods on the car, they got it down by $3,000, which was really good over the past year. It's really awesome progress by them. But they just don't have the factories to be able to scale it as quickly as a lot of people think. So when it comes to the Cybertruck, his argument on the call was like, look, there's a ton of demand. We know there's a ton of demand, but it's going to take us a while for this thing to really put it in our numbers until, we get it in there. DRK says, that's right. Other EVs are not selling while Teslas are sought after. Correct. Absolutely correct. Which is why when they say, we're not going to deliver that many vehicles, I don't know if they're sandbagging. I mean, even Dojo, I don't know if Elon's sandbagging a lot of that stuff and they're trying to just reduce expectations. I mean, a lot of people on Twitter are like, hey, maybe they're trying to tank the stock a little bit and try to, get it to rebound really nicely if expectations go low. Maybe because global demand, I don't think necessarily applies to Tesla, but they also could just be honest about it and say, hey, they're trying to cover their butts in case there is a significant reduction of anything. Dom says people are missing the big picture and patience of what Tesla will be 5 years from now. I agree. It's just in the short term, there is headwind after headwind for this automotive business. There's some tough headwinds, but that doesn't mean that the dip is not worth buying on this one. And look, we're at 180. I mean, this is going to be one of the most exciting market opens. We're at 189. I really don't know if we shoot back up to 200 or if we go down to 170. I think it's 50-50 on both those options. I think it's 50-50 on really both those options. I think there's a bunch of people that are like, all right, I'm buying, I'm finally getting back in. And there's a bunch of people like, this business is screwed for the next couple of at least months, and there's no reason to buy right now. Okay, let's get another little update as well on Tesla stock, and we'll keep going from there.
Shares under pressure after the EV company narrowly missed earnings estimates and warned that its expansion will be notably
on the top and the bottom line. But the gross auto margins, excluding the zero emission vehicle credits, they came in better than expected. 17.1%. The street was expecting 15.7%. But there's the key right there. 2024 deliveries, the company says they will be notably lower. Slower growth in 24 than in 23 in terms of how much deliveries grow annually. When you look at their annual deliveries, they hit 1.8 million last year. They were up 24% in 23. Go back to 22, they were up 40%. Now you're not sure how much they're going to grow in 2024. Here's Elon Musk on the conference call talking about why the slowdown is happening as they transition to the next generation vehicle they plan to build.
The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America.
Left unsaid during the conference call was the fact that the EV market overall, for all automakers, it is slowing down in terms of the rate of growth relative to what we saw in 2023. It's still growing, just not as quickly. Tesla finished 23 number one in global EV sales, but in the fourth quarter, it was topped by BYD out of China. And during the call, Elon Musk talked not just about Chinese EV companies, but Chinese automakers overall, and the fact that they are expanding rapidly around the world. They're very good. And if the world, in terms of countries, are not prepared with trade restrictions, that the Chinese are going to demolish. And that's the word that Elon Musk used, demolish the competition. Quickly take a look at shares of Tesla over the last year.
So Dom says the RSI is at 27 already on the daily chart, and the weekly is at 40. So I don't see us getting below 150. Question is, if we get to 150, that's hopeful dreaming. I actually agree with you. I really do agree with you. If we get below 150, I think that I just do think that's going to be one of the best risk rewards over the next 5 years that exists. I mean, instead of having to buy 250, hoping you could get to 300 and 310, which is, I think you get to that $1 trillion market cap. If you can get at 150 and, interest rates come down and we see a major, rebound back to that 250 level, then they just have to show some better growth or some more catalyst. Like I don't think we get to below 150. I think that's a little too bearish, but if we do, it is a question of who's selling it off. Like when we got to 100 in January, it was because the entire market took a beat down. The market's doing great right now. So if we transition to equities a little bit, Tesla's one of the only stocks that's red. I mean, Nvidia's up 623 in the pre-markets, 1.67%. Palantir is up 1.85%. KRE, Regional Banking Fund, they're up. We're going to talk about after the bell why the regional banks are up and why financials are up. The Federal Reserve announced something yesterday that is basically saying they're going to cut rates soon. That's essentially the implication I got from it. TFC right now up about 1%. Trying to close in on $38. That would be really nice to see if we can hold above that level. Celsius still struggling below 0.17%. And then all of Mag 7 is great, except Tesla. Amazon, Google's at 151. Meta at 390. Meta now $1 trillion market cap. Microsoft above 400, 404. I mean, investors are just plummeting in more dollars into Microsoft. Apple 194. Tesla's the only one that's down 8% on the news of earnings. It's kind of showing that, people were like, people say if certain stocks have a bad earnings, it messes up the entire market. Yeah, Tesla's not one of those stocks at this point. Tesla's not one of those stocks. Like Tesla can have a crappy earnings and the entire market can just do well, right? The market's just like, oh, the market's like, you're just there in the corner and we're just doing what we have to do. And now if Amazon messes up earnings, that maybe, the whole market's gonna be like, oh, okay, Amazon, but Tesla's not indicative of the broader consumer appetite that exists. It's part of the consumer segmentation, like people who want to buy cars, but it's not like, if people want to buy toothpaste like Amazon. And so I think the market's also deviating from Tesla being super correlated to their growth, which is actually, I think, good for Tesla shareholders. It gives them a little bit of breathing room, right? But it's also good for the market in case that one stock, doesn't do as well as some of these other stocks. Bitcoin at 39.9, 39,900. It's up 0.10%. Bitcoin's struggling to even try to get to 40,000. ARK is up 0.22%. Kathy did not buy any Tesla yesterday. We'll be very curious when Kathy buys, because if Kathy doesn't buy this dip right now, then maybe they see a lot more pain coming. But I would imagine Kathy, if this, this morning, as soon as it opens, they're going to buy some, and that might also, save the stock a little bit in the early mornings, as Kathy tends to buy a little bit more. My average price on Tesla is 291. Yeah, I mean, I would DCA, Tony, if your average is 291. Maybe you can wait for some better prices, but if you have that big of an average, yeah, it might be time to reduce that. Definitely might be time to reduce that a little bit. So Netflix is better than Tesla. Yo, there was this rumor, not a rumor, but there was this article that came out yesterday. We got market open in 2 minutes, that Netflix should replace Tesla in the Magnificent Seven. Netflix's market cap is 238 billion, 550, up 1% of the pre-market. Tesla's market cap is about 650. I think that's a bit ridiculous to put the company that, makes Stranger Things ahead of Netflix. Like, that's just an insult to, I think, our collective intelligence. It's a FANG company, but it's not a Magnificent Seven. Magnificent Seven is reserved for the Magnificent Seven. I mean, Netflix is a good company. I don't know if it's Magnificent Seven. So we'll see if that plays out. PayPal, guys, I'll be live at 12:30 today, streaming that event. So that's at 12:30. I'll be live. I'll be live at 12:30 Eastern Standard Time. So PayPal, hopefully, we'll have a good event and see what happens from there. But I'll be live during then, and we will see if PayPal does better than Tesla. We'll see what happens there. So for those that were wondering about that, I'll be live at 12:30 and we'll discuss that event. All right, folks, January 25th, 9:29 a.m. Let's have it on Tesla, ready to go. The stock market is now open. Wake your ass up. Here we go. Tesla opens. Look at all those green orders. Look at that. There was a ton of green coming in right as it opened up. Tesla opens up down 9.42%. So we're seeing a little bit of a sell-off, but a little bit of a hold of that price as well as people are buying. It's not tanking immediately. 188. And you see how it's struggling at that 188 level? It's kind of just like teetering back and forth. There's a ton of buying pressure along with a ton of selling pressure happening all at once. All at once right there. Look at that. Wow. That is incredible. That is absolutely incredible. So 188, it's down 9%, and it's maintaining that 188 level. It's not fully going down. It's not fully going down. 71% of you on the poll said Tesla was not going to 100. The rest of you said that it was. So 70-30 mix on that. Okay, 189. We'll get back to that, and we'll keep going from there. KRE is up 0.69%. Netflix 552 up 1%. Nvidia up 1.42%. It just does not look like Nvidia knows what it means to sell off. It just keeps ticking higher. So Nvidia is doing well. ASML 868, amazing, up another 2% yesterday. This company was up about 10% because they beat their Q4 bookings by 6 billion euros. So people are pretty excited for ASML. Rumble is up 0.19.4%. Truist up about 1.16%, 37.97. Microsoft is up. Celsius is slightly up. Google 151. Google now holding that 150 range, which is really nice. CleanSpark up 0.72%. Let's look at some of the crypto companies. Crypto is all green. We got Bitcoin above 40. Coinbase is up about 1%. Marathon up 2%. MicroStrategy up slightly, but they're up. Bitfarms is up. Robinhood's basically flat on the day, 1081. Hut 8 mining down a little bit, and CleanSpark is up about 1%. Okay, so crypto companies are decently green, a little bit of red, but nothing too crazy. Nvidia 619, Google 151, Apple's green, Meta's red, but barely. Amazon's red about 1%, and then Tesla is down 8%. We are not seeing Tesla fall to 185 and 170. We are seeing enough buy-side pressure to support the stock. We are seeing enough buy-side pressure to support the stock. Crossroads says sold some SoFi puts into earnings. Let's go to SoFi. How are they doing? They're up 1%, 764. Not horrible. I think the major catalyst for SoFi now is, January 29th, and that's Monday. I'll be live streaming it on the channel. January 29th, if we don't have a good earnings, we're stuck in the $7 purgatory for like the next 5-6 months. If we have good earnings, maybe we get lucky enough to, touch that $8-9 range. QQQ 427, basically at all-time highs, was at 429 yesterday. PayPal, oh wow, PayPal selling off. I didn't even know it was at the $62 range. PayPal. Look, I'm optimistic about this call today. They said they're going to announce 6 innovations. That's 6. That's not 5. That's 6. That's 6 big things they're going to announce. If at least one of those 6 is reasonably good, maybe the market should, get excited for PayPal. Google at 152, but we'll see. We'll see how they price in PayPal. We got a bunch of people in the chat saying they're selling Tesla. Wow. So we have some bearish sentiment out there. Look at that. It's 192. It's getting eaten up. The dip is absolutely getting eaten up right now. The call's in like 3 hours. Yeah. PayPal calls in 3 hours. I'll be live on the channel. Sean Foley says, I thought about shorting NVIDIA 500 fall. A good idea that I'm glad I've dropped. Yeah. I mean, Everything Money guy started shorting NVIDIA with his brother's money. And let's just say it's not been going well for them. If you don't know that channel, that's a channel that's on YouTube that, focuses really on the fundamentals and stuff. And they fundamentally did not get NVIDIA right. I will be streaming the PayPal call for those who are asking. 12:30, I'll be live on the channel and I'll be streaming it. Let's look at SLG. Yeah, I think Kathy's buying the dip, dude. 189 to 192. We got someone buying the dip. SLG had earnings yesterday. It was a pretty good earnings, 2%. Tesla earnings were so bullish yesterday to Steve that he was considering selling out of his entire SLG position. And he has a very big SLG position with an average of like $25 to get into Tesla because he is so excited about this damn bot. We talked about it last night on Finance Junkie. He's just so excited that this bot is going to change the world that's what he's betting on. So Palantir 6093 up 1.07%. Not too bad, but that's what, that was Steve's bull case, and that's what he's looking at right now. Celsius up a little bit, 1.93%. Okay, let's talk about what the banks did yesterday. Let's talk about what the Federal Reserve did yesterday, because I think we need to spend like a good 5 minutes on that. That's some big macro news that's super, super important. Then we'll get back into the equities. So the Federal Reserve yesterday essentially ended their program that they started in March of 2023. Okay, so this was the press release they came out with yesterday, and I just want to read a little bit off of it quickly and then analyze why it was shocking yesterday. So Federal Reserve Board announces that the Bank Term Funding Program, BTFP, will cease making new loans scheduled on March 11th. During a period of stress last spring, the Bank Term Funding Program helped assure the stability of the banking system and provided support to the economy. After March 11th, which is in a month, banks and other depository institutions will continue to have ready access to the discount window to meet liquidity needs. Remember, this funding program is basically what saved not only the bigger banks, but the regional banks from potentially going under, which is where they injected like $300 billion of liquidity into the market. And that's, what got the market at least excited to not collapse in March. As the program ends, the interest rate applicable to new BTFP loans has been adjusted such that the rate on new loans extended from now through the program expiration will be no lower than the interest rate on reserve balances in effect on the day the loan is made. Basically the same as the Fed funds rate. This rate adjustment ensures that BTFP continues to support the goals of the program in the current interest rate environment. This change is effective immediately. All other terms of the program are unchanged. Now, why does this matter? Basically, if they're ending the BTFP program and not renewing it, they started it last year when banks were collapsing because the banks couldn't sell loans because of their AOIC losses. You know what that is. If you follow the channel, we're talking about regional banks and the Bank of America, JP Morgan, they're having $40 to $100 billion of losses, AOIC losses on those loans. They need to be able to lower interest rates on the federal level to be able to market those loans to the Fed's fund rate to make sure the delta does not create a massive spread of just like billions of dollars of losses on their books. And when they do that, their tangible book value goes up, which is why rate cuts are so important. So they're ending it. This means two things. Either number one, there is no more banking crisis and banks were just arbitraging in different rates that the BTFP program was allowing them to do. Or they're going to start reducing rates so that they can start selling the higher rate loans. That is kind of bullish because that means rates are coming down, so they don't need to be that worried about saving the regionals by giving them all this liquidity in the BTFP program because they're going to be cutting rates. So they're not that worried about, a TFC being like, oh my God, I have all these loan losses. It's only going to get bigger and bigger and bigger if rates stay higher because the Fed's getting ready to cut. Maybe it's not in March, maybe it's in May, but if the Fed's getting ready to cut, then it's not going to be in the worst situation. There could be an outside chance where, the Fed is stupid and they're just risking a banking failure. That's probably not going to happen. They probably know that they're going to cut. So from that perspective, it seems like more bullish than bearish on what's happening here. Chris says, Amit is a banking expert now. I feel proud. It's literally only because of Chris. So thank you, Chris. I appreciate it. Okay, Tesla's at 186. Wow. There you go. You got a little bit more of the sell-off. Now down at 10%. Now down to 10% on Tesla. 187. 187. We just went from 192 to 187. So you got some massive block sells on Tesla that came back down. Alex says, aren't cuts bearish? No. Cuts are bearish if they have a lot of cuts soon. So if tomorrow, if Jerome Powell says we're cutting by 75 basis points, all of us should sell everything, because there's no way in February you cut by 75 basis. It just doesn't make any sense, right? That means there's something so broken in the economy that maybe we'll have some short-term momentum, but stocks are going to go to shit. But if he cuts in March by 25 basis points and he takes his time, he kind of seduces the rate cut, right? He like does a lot of foreplay with the rate cuts. Then that means that the economy is in a good spot. Inflation's coming down and he just doesn't need to keep rates that high. So it's not bearish unless he like aggressively penetrates these rate cuts through the market. I'm sorry for all the innuendos. It's a Freudian slip of things I'm thinking about. Anyway, 188 right now on Tesla, down 9.5%. Everything else is green. Baba's red a little bit, down about 1%, but most stocks are green. PayPal's down, but that's slightly. NEO is down 3.8%. Yikes. NEO is down like 14% over the past couple of days because of China pumping liquidity into their markets, but NEO's down. Verizon is up. There was a take on CNBC yesterday where people were talking about Verizon over Tesla. So it is officially started. It is officially started. The discussion of, should we get into a pure value play over a high growth tech company? The conversation has started when you have CNBC people discussing Verizon versus Tesla. So it is here. The discussion is officially here post earnings. S&P 487, Snowflake 206, SLG 45, and then Tesla down 9%. Tesla continuing to go 9%. Oh shit, Derek. You sold 200,000 shares after the call last night. Wow. Okay, so Derek is turning into a friend of mine, and he was telling me a bit about his Tesla position. For those that don't know Derek, he's the guy who gave what do you call it? 50 gifted subs yesterday. Again, I'm going to put his Twitter in the description. I think you guys should follow this guy. This guy's just like an absolute entrepreneur baller, and angel investor. Like, you guys should definitely follow me. He's in the chat right now. But 200,000 shares is okay. So let's just say you sold it at what, 189. 200,000 shares times 189. Siri, what's 200,000 times 189? That's $37.8 million. Just to give you some context of Derek selling in terms of how much money how much money he made today just by selling off those shares. So he thinks it's going back to 150, and that's when he's probably going to get back in there. But damn, that's tough, dude. 200,000 shares, that's tough. That's it. That means, when you got people like Derek selling 200,000 shares in a day, it means that there was something on the call that really. That's why we went from 192 to 187, Derek. It's because you executed that fucking 200,000 sell order, and the thing collapsed. You got people that are definitely feeling a little less, a little less bullish on Tesla. Now, granted, his average cost is 63, so he has a hell of an amazing cost on Tesla. He was in there very early, but 200,000 shares means that, look, if you see it coming lower, then you want to get to a better price. K Tuna says, I call bullshit, screenshot, or it didn't happen. Trust me, I have screenshots. I would not be recommending to follow this guy if I thought he was. This guy's, just look him up on LinkedIn. This is one of the best investors in the world that no one knows about. He has like 6,000 people that follow him. Like, dude, like, he's like a hidden gem that somehow follows me on Twitter because he cares about Palantir. So that's why he's in my network. But this guy's legit. I mean, you can either believe me or not, but let's just say I've seen some screenshots. He's up there. Okay, send them then. No, I'm not going to send the screenshots. If you either believe me or not believe me, I'm not going to do all that. Amit, at what price are you willing to buy your DCA? Again, look, I mean, if Derek thinks it's going to 150 and he just sold 200,000 shares, I don't know. Look, I don't know. In all honesty, I don't really feel comfortable buying. I want to see how the market reacts to it. If I have to buy back at 205, then okay, whatever. But if I can get a price at 160, 170, then that would be better as well. So I don't know. We'll see. We'll see how it plays out. But I think it'll take some time before it actually, happens. And we'll see. Derek said 150. Yeah, I mean, look, I think it could happen to 150. HubX guy, yeah, HubX. That's one of his companies as well. Amit, how many Tesla shares do you own? I own less than 200,000. I own 15. So, I mean, to me, dude, this is not the most emotional thing to me because I'm like, all right, I have 15 fucking shares. Like, if it goes to, it's like, it's not that big of a deal to me. If it goes down or up, it's just whatever. but if it can go lower and I can get a better price, my goal was to have 50 shares by the end of this year. Now I'm trying to maybe 100 shares is more likely we can get there if it gets lower. And that's when we'll buy. Too many people are looking at 150. I agree. Too many people are looking at 150 as well. So I don't know if we can necessarily get there, but I think 160, 170 or 170, 180 maybe is possible. My average is like 208, 209, something like that. So it's in that 208, 209 range. It says a lot if an old bull is starting to sell. Yeah, that's why I want to highlight Derek's comment. Derek's been here since like 2012 in Tesla. He's been here for a while. So if he's selling off some shares, that means he's not necessarily seeing a lot of potential in the short term. Now, granted, he could be wrong, but I mean, this call was sobering. I really think that's the perfect word to describe it. This call was very, very sobering at the end of the day. It was pretty tough to just imagine, you know, that things are super, super, super peachy right now. But we'll see. It's holding up decently. 188 is not horrible. I mean, 188 is not the worst thing in the world. You know, it hasn't bottomed out to that one. I mean, we have a long time to go for the rest of the day to see where it ends up. But 188 to 190, I think, is not the worst situation for it to be in, given, you know, how tough the earnings were to be able to dissect. It's going to be really curious to see what Dan Ives has to say about this as well. I mean, that's going to be really, really interesting because this guy said this was a make or break it call for Tesla. And if he gets bearish, which I don't think he'll get bearish, but I think he will be a little skeptical that the automotive business is going to have a ton of tailwinds, then that would say something as well in terms of what happens. Is Kathy still neck deep in Tesla? Yes, that is our third largest position. Kathy is a super, super big bull. So I think Kathy's buying the dip today. I think she has to. I think she can't justify to investors for this to be this big of a position, not buy the dip. You know, when stock falls 10%, historically she buys the dip. With Palantir, she bought the dip. When it fell like 14%, she always buys the dip when it falls really badly. 2 weeks ago when Palantir fell to 15.95, she bought the dip about 1 million shares. So I would imagine that she does buy it today, but we'll see. We'll see. Okay, in other news, we also had U.S. GDP growth that came in better than expected. So that was some good news that happened today. The U.S. economy grew 3.3%, which is much better than what people expected. So let me just share this real quick. Dan Ives said the call was a train wreck. Does anyone have a link to him talking about it? Or did he tweet about it? Because I actually want to read what he said. I would like to see that. Okay, so U.S. GDP. Here we go. Derek, you don't have to do this, but I appreciate it, man. Derek, thank you for another 50 gifted. For if anyone wants to join, you just click it and you get to claim a free membership. I appreciate you, man. Means the world. Means a lot. That's like $250 because it's $5 a membership. So thank you so much, Derek. Really, really appreciate it. For those that want to claim it, I think you just click on the green thing that I'm highlighting, and then it just gives you an option to claim the membership, and then boom, you become a channel member for a month for free, and you don't have to pay $5 a month because Derek covered it for you. Thank you, Derek. He gave 50 last night too. That's really kind, dude. That's really, really kind. Thank you so much. It really means a lot. Thank you, man. That's super, super awesome. Super awesome. Kelly never does that. So thank you, Derek, because Kelly never does that, but Derek did that. So that's awesome, Derek. I appreciate that. I appreciate it. Thomas said too many people are thinking in 1 year timestamps. 2024, nothing ramps. 2024, Cybertruck ramps. 2026, Project Redwood ramps. Kager will start showing amazing growth over the long run, but this year will be slower, which is why I think this year is a year of DCA. What's Derek's Twitter? Let me put it in the chat again. And you guys should definitely follow him. Again, this is one of those guys, if you care about business, you should follow him. He is a massive angel investor. He's had like 3 successful exits of multi-$100 million. He's made a shit ton of money in his life, and he's done it in a really humbling way. And I mean, the guy's casually selling 200,000 shares of Tesla in the morning like it's nothing. So like this is, and you guys don't even want to know his fucking average price on Bitcoin. I'm not going to say it, Derek. If you want to say it, you can put it in the chat. But like he told me it yesterday, you would not believe it. You legitimately would not believe it. But he has a lot of Bitcoin, and his average price would make you like vomit just knowing his average price. Derek, you can say it if you want. I'm not saying, but it's a nice price. It's a nice fucking average price. Okay, let's go to the Dan Ives tweet real quick because you guys said Dan Ives tweet. Then we'll go to this article about the U.S. economy. Let's see what Ives had to say. What did Dan Ives have to say? What did Mr. Ives have to say? And how upset is he from this? Did he reduce his price target? Did he reduce it? Dude, did he reduce it? LOL, he's rich, but he reposted the Mr. Beast giveaway. Dude, money is money. That's how rich people stay rich. Okay, he put it in the chat. It's less than $1. Its average price on Bitcoin is less than $1. It is what it is, dude. He told me that shit last night, and I was like, you've got to be kidding me. He was like, no, dude, I've been in this shit since 2009. I was like, all right. And he has a lot of it. We're not talking about 5 or 6 Bitcoin. He has a lot of it. So, I mean, less than $1, dude. You're talking about like fucking 60 cents. Like, that's insane. That's fucking crazy. On Bitcoin, the thing's worth 40 grand. And like, it's just insane. It's just, I want to be like Derek when I grow up. Look, even Chris said, damn. Even Chris is like, damn, dude. This is what I'm saying. You guys should follow him. He's just like, somehow he's in my network. He's the guy, for everyone who wants to know, in that tweet that I called a billionaire. He's the guy I called up the other day, asking him about the idea that I have. And he was giving me, he loved the idea. He was giving me a ton of feedback, all this stuff. But somehow he's in my network because he's super interested in Palantir. And so that's how we connected. And then I find out the guy's like in Tesla since 2010 and Bitcoin since fucking 2009. Like, he's an OG. Super, super, super OG. Okay, so what is Dan Ives saying? What is Dan Ives saying? Oh, he's actually talking. Okay, we got a little bit of him talking. Let's see what he has to say. Here we go.
A dreadful assessment. Stock is lower by something like 7% in the pre-market. Have you changed your call on the name?
Look, I mean, we're still bullish, but no, from a fair value perspective, I mean, 350 goes toward probably lower threes, 3 at 15.
Wow. He lowered it by $45. Wow.
From a base perspective, because numbers are going to come down. And the biggest issue here is that you didn't give goalposts. Because by not giving goalposts now, the Bears are going to run with it. And look, the Bears won last night. The long-term story is intact in terms of FSD, in terms of if you're a believer in EV, which we are, $1 trillion market cap, I do believe is on the horizon next few years. But in the near term, I mean, this is one where it's a glass half empty relative to how they talked about it. I mean, this was sort of a 101, not how to do a conference call.
Dreadful assessment.
Wow. Dan Ives didn't like it. I mean, look, he's making sense in terms of the fundamentals and valuation and all that stuff, but he's bearish. 188. He's reducing the price target. What did he say? Wow. So, he's using some harsh language here. Dan Ives said, we were dead wrong expecting Musk and team to step up like adults in the room and give a strategic and financial overview of the ongoing price cuts, margin structure, and fluctuating demand. Instead, we got a high-level view with another train wreck conference call for the street. Price target 315. I got to quote tweet that. Oh my goodness. Dan Ives just called the Tesla earnings called a train wreck and said there were no adults in the room. Wow, Dan. We got to get Dan onto the channel, dude. We got to get his thoughts on this. I got to see if I can reach out to him. Did I make a typo on it? Oh, well, I made a typo. What was the typo? Where's the typo? Oh my goodness, Dan Ives just called the Tesla earnings call. Oh, call. Damn it. All right. That's a quick one. We'll fix that. We'll delete that quick. That's wild, dude. That is wild. That is a pretty crazy thing to say. Is that not a crazy thing to say, dude? Is that just me? Dead wrong. First of all, he used the word dead. That's a tough adjective. Then he said adults. He's saying they're children, they're little kids. And then he's saying that it's a train wreck because they're not giving a strategic vision for where and look, to be honest, I'm not saying the earnings call was a train wreck, but in terms of just listening to it, they were laughing. They were like making jokes of the fact that, Optimus is whatever. They weren't really like painting a sophisticated vision on demand and margins because they didn't want to give those numbers. Elon was like, hey, don't ask me about any new products. I'm not going to answer them. And, he's always like that. But, tough earnings, when shareholders have to digest that, it's tough to also digest Elon speaking like that. Just being upset, at people for asking him questions that just want some basic clarity on next generation vehicle. He was kind of like, take it or leave it. And Dan Ives is basically saying, well, all right, then our price target's going down. Our price target is going down. Wow. Was he on last call last night? No, he wasn't on last call. Okay. So he was on there before. I'm gonna see if we can get the entire Dan Ives piece. Let's see if we can pull that up. If he has the entire piece. That's tough, dude. That is really tough. That's tough for Dan Ives to say that. He's a bull. He's a major bull. Oh man, that's tough to digest. Kevin says Tesla's gonna fall like end phase, but be ready because it's gonna turn. If you're not DCing, it's gonna miss and see the show. Yeah, I don't know if it gets that low as end phase. I mean, end phase fell 50%. I don't know if Tesla gets that low, but it definitely can imagine it could fall like that. What was Dan Ives' price target for Tesla? It was at 350. Now it's at 315. So it's down $35. Huh. 315 is bad. It's not that 315 is bad. It's that if you're reducing it that low and you're using this commentary. Remember, Dan Ives, he has a lot of influence on the street. Some people may say he's not that influential. Like, people listen when he talks to people. There's a reason why he's on CNBC. Like, he's gotten a lot of calls right. He's been right on Tesla for a while, Microsoft, these big names, on tech in general. I think he's gonna be right on Palantir. But he also travels. Like, when I talked to him, he said on my channel, he travels across the world. He does like 2 million miles a year discussing, what's going on in the world of tech. And so when people listen to him, when he says something, if he says Elon's acting like a child, they're going to take him more seriously because they don't have time to analyze the earnings call. They pay Dan to analyze this stuff. So nonetheless, it's still a 2x higher price target. I agree, but it is sobering at these levels because he's saying that, look, it's going to be tough. And I think it's the same thing everyone's saying today, that it's just going to be tough to imagine that at this growth rate, they're going to be able to substantially increase the market penetration they have and the ability for them to actually justify the valuation. Where's the price right now? Let's get into the equities and see how bad it is. Still 189. So it's not that bad. Down 9%. It's really not that bad. I mean, in terms of like a huge dip, it hasn't happened. Netflix is up, SoFi's up, SLG's up, Palantir's down a little bit. KRE is down. Nvidia is up 1.4%. TFC's up a little bit. Yeah, most of the market's flattish or green. Look at CleanSpark, up 4% of the day. Not bad at all. QQQ is fine. SMH Semiconductor Fund is fine. Tesla is still down 9%. Okay, let's do that quick review of the GDP article I was talking about because that is super important. It'll take us like 2 minutes to get through that. I mean, not even 2 minutes. It's just a headline, quite frankly. There's not that much news on it. But U.S. economy grew 3.3% pace in the fourth quarter, much better than expected. Why does this matter? Well, the market expected 2% growth. U.S. economy is at 3.3%. It means unemployment is low. It means that rates are high, but not high enough to create economic stagnation in terms of the lack of growth. And it means we're beating expectations, which means productivity might end up being something in the next couple quarters that actually begins to scale. And so when you've got AI continuously innovating and you've got deflation coming from China, we talked about China increasing their reserve requirement ratio and then basically exporting deflation for them to not, kill their economy. They have to reduce prices. If they have to reduce prices as the world's largest manufacturing hub, and those prices get exported across the world, that's bullish for inflation coming down. You got housing lags, that's bullish for inflation coming down. And then you've got unemployment at 3.7%. That's bullish for just general growth, health of the consumer. If you've also got AI creating some deflationary trends and productivity going up, you've got a sort of dual echelon of growth potentially being higher than what the street expects for the coming quarters. And if that's the case, with rates coming down and inflation coming down and growth going higher, 2024 should be a really good year, just on a pure macro basis. But a lot of those narratives can be interrupted in a variety of different ways. But that headline, I think, was very important just to put out there. U.S. economy growing at 3.3%, much better than expected, than 2% from the street. So that's one thing that I think definitely is important as well. How are you not talking about CleanSpark and Bitcoin anymore? No, we talk about it. We talk about it every day. I literally 10 seconds ago, I just talked about the price. But the problem is it's stuck, right? The only news to talk about in the context of CleanSpark is that they have a $25 million or a $500 million share offering, a shelf offering that they might do to dilute shareholders, or they might not. And so it's one of the best miners that's performing in terms of the other Bitcoin miners because they're vertically integrated via their electricity and their ability to, they have the lowest cost to mine a Bitcoin. That's the TLDR. It costs 14 grand to mine a Bitcoin. Bitcoin's at 40 grand. So, they make a 25 grand off of it. But they can issue dilution at any time. And when they do that, that's where the stock might suffer. But I think they would only do that when Bitcoin starts to go higher. So there's just nothing else to talk about right now because Bitcoin's kind of stuck in this territory. So until we see a change, then things probably won't be there. Microsoft's laying off 1,900 people. Wow. 9% of the gaming division is gone. Huh. That's not, I mean, we're seeing a lot of layoffs, dude. There's a couple of other layoffs that I saw yesterday that I'm forgetting, but there are a bunch of layoffs coming. We saw Discord and Instagram 2 weeks ago. And now we got Microsoft. Wow. What time do you usually start the market open stream? 8:45 a.m. Eastern Standard Time, Timothy. 8:45 a.m. Write it down. Make it a reminder on your phone. Turn on post notifications. You are not allowed to miss the market open. Not anymore. Once you're, it's like the Matrix. Once you're exposed to it, you now you just know about it. Yo, by the way, let me give a shout out real quick to someone who I was DMing yesterday on Twitter. I'm trying to pull it. Yeah, their name is Outsmart Crypto. Dude, this was or no. Well, so there's two people. First of all, he said he didn't think he would become a daily watcher of the market open, but he's become a daily watcher of the market open. He found me because of Palantir. Now he watches every day. So if you're watching it, bro, shout out to you. Thank you so much for being here. And then someone else, I just want to read real quick the message they sent. I mean, this was a very humbling message. They said, I'm a fresh new listener to your channel. I opened a Palantir position a week ago. That's how I found you. I love the tidbits you add in the word of the day. This morning, I was driving to work in Austin in the middle of a gully washer when you dropped the word of the day. Surprised to say, I did in fact know the word from my childhood. There's a water boat ride at Six Flags Fiesta, Texas, and San Antonio called the Gully Washer. How crazy is that? I hadn't thought of the idea or word in 15 years, but happy to be one of the 2 entire people in the chat whom you guessed knew the word. Definitely I'm going to use it while I'm drunk bar hopping with my friends. This guy heard of the word Gully Washer 15 years ago at Six Flags. He's in his car in the middle of a rainstorm of a gully washer. And then I say the word of the day is a gully washer. I mean, that's just like, that only happens on the fucking market open, dude. That is why this market open is so exciting. That is just, it was the craziest thing to hear. So shout out to him, dude. Thank you so much for tuning into the channel. And he's becoming a regular listener as well. So that's awesome. Oh, that's him in the chat. That's Jake. Thank you for being here. Jake, I love it. I love it, Jake. Thank you so much. That was crazy, dude. That was a great story. I didn't know your name because your Twitter didn't have your actual name. So that was awesome, dude. Shout out to Jake. He's driving right now again. Dude, that was crazy. First of all, it was very humbling to know that someone listened all the way till the end and they were listening to the word of the day and all that stuff. But the fact that they were in a gully washer, that was so badass. Like, that was awesome. That was great. Okay. So shout out to Jake. And again, shout out to everyone who's joined the market open, who's new. I know we got a bunch of new subscribers and thank you for being here. Outsmart Crypto, I just got your message on Twitter. Thank you for the shout out, homie. Yeah, man. Thank you for being part of the channel. Thank you. So I don't even know how words can express the gratitude I have of being able to get up. It's the best job in the world. It's a job that does not pay well. Let me tell you that. You're not doing it for the money. We're not doing YouTube for the money. We're doing it to build a long-term brand. And you got to really love it. And I think by now you guys know I fucking love this shit, dude. Waking up in the morning and getting to talk about not only stocks, my opinions, making it funny and entertaining and hopefully informational. I love it. I just love it. There's nothing better I could ask for. So thank you all for being here. It means the world to me. Tesla 189 down 8%. SoFi's up 2%. SLG up 1.49%. Netflix up 1.13%. Palantir 1677. Nvidia 619. Truist 3760. I'm going to look up the Palantir partnership today with Carasoft because we got an extension on that. Let's see if we can get a press release there. Oh, there we go. Here we go. So let me share this. Let's talk a little bit about this. This is definitely an important deal, even if it's not a crazy deal. So Palantir and Carasoft have expanded their partnership to deliver mission-critical software to the Canadian public sector. That news breaking this morning. We'll end it on this, and then we'll do the word of the day. So building on the success of Palantir's partnership with Carasoft in the United States, Palantir has authorized Carasoft, the trusted government IT solutions, to be the sole distributor of the Palantir platform under the Government of Canada's software licensing supply agreement. This is important because I don't think they had a partnership in Canada. Carasoft worked with them in the United States. For those that don't know Carasoft, think of it as a middleman to get your product into the government. So Carasoft will take like Foundry or AIP or Gotham. They're going to repackage it. They have a network of system integrators and distributors, and then they're going to sell that shit into the government, and they're going to take a little percentage off of the deal that they get you. So it's just another, it's like a salesman, but it's a very sophisticated salesman for Palantir. If the partnership has been extended, that means the partnership has been going well, which is really good because that Wall Street Journal article that said the government sector has been falling for Palantir. This is good that at least one partnership is working. And then if it's expanding to Canada, that's also a really good thing. Quote from David McNaughton, the director of Palantir Technology Canada's Inc. Our partnership with Carosoft Canada represents a key milestone in Palantir's continued growth and investment in Canada. We look forward to the opportunities that will unlock for using Palantir software to transform now how Canadian public sector entities execute their mandates and achieve mission success. The expansion of our partnership with Palantir into the Canadian public sector demonstrates Carosoft's commitment to facilitating streamlined acquisition channels for government agencies in the US and Canada. Makes sense. Palantir's data-centric tools for operations and decision-making solutions are critical for agencies as they work towards their digital modernization. We look forward to collaborating with Palantir and our reseller partners to support the public sector's efforts through easy and efficient access to the critical technology they need. Look, that's good. That's not bad at all. That's good. We got a deal that's going to expand us into the government. We need to expand us into the government, and that's important. So, not bad. Definitely nothing that's horrible when it comes to Palantir. And it's good that that deal is happening now as well. So not bad. That's not the biggest news. It's definitely not a stock moving news, but as an investor, it's good to know that at least they're moving into Canada. They're working with the government, and they're not in a situation where they're not expanding into the government sector. Now, granted, government revenue, I think, is still going to come in flat, but as long as guidance is not horrible, then hopefully it's not going to be the biggest problem. Okay. Cool. So let's end it off with word of the day, and then we'll go from there. The Canadian government has already been using Palantir in the defense sector. Yeah, they've definitely been using them. Hopefully this just expands them to, all the other sectors that they could be using them for. Word of the day is periodelia.
Pareidolia or pareidolia.
Pareidolia, okay. The illusory perception of meaningful patterns or images of familiar things in random or amorphous data as a face seen on the moon. I think I know what this is trying to say. Let me see these. The excitement grew as the researchers discovered what appeared to be a pareidolia in the data connected from deep space. As I stared at the clouds, I experienced pareidolia and saw a bunny shape formed by their fluffy contrast. Yeah, it's when you see something that's not real, but you're seeing it and you kind of think it's real based on it not being real, but it kind of feels real. That's what pareidolia is. Huh. Interesting.
Pareidolia or pareidolia.
So if Tesla investors see a big middle finger on the stock price chart right now, maybe that's a pareidolia that they're witnessing today, given that earnings call was, in Dan Ives' words, a train wreck and there were no adults in the room. Last look at Tesla, 188 down 9.37%. Tough call for Tesla. We'll see where it goes from there. I'll see you guys on the market close at 3:45 p.m. And we will. Oh, sorry, no, I'll be live at 12:30. We'll do a PayPal call, and then I think we'll be live again for the market open or the market close. So I guess today's just the day of going live. So we'll be there for PayPal. PayPal right now. Let me check their stock. PayPal's at 63.20. Hood is at 1081. Robinhood's pretty much flat, and then Palantir to end the day. The market open 1675, so they're flat as well. Tesla 188.60, down 9.3%. PayPal 63, Robinhood $10, 1081, and Palantir 1675. All right, so I'll be back for PayPal 12:30, and I'll be live streaming it here, and then we'll do market close at 3:45. So we'll be back for PayPal in a few hours. All right, everybody, thank you for being here. See you guys in a few hours. If you're interested in PayPal, make sure you tune in and join. We'll do their live stream, and we'll see if they can shock the world, as Alex Chris says. Thank you, everybody. See you later. Bye-bye.